So hello guys, welcome back to another charting analysis. As you know from my previous video that I have passed the phase one $6,000 fund index account. Okay, and this all of this trading will be on phase two. And happily I have traded today around 210 plus dollars. Okay, to be exact, it's around 194.60 plus 22.20, whatever it is. Okay, so when I got the phase 2 con, it was on Friday, and obviously the Friday rallied against my daily bias. So yeah, I lost, and then I made some loss. So I was in a drawdown of around minus $114. Now today I took a trade in the Asian session. To be noticed, I took a trade in the Asian session. Okay, and I made around $200, which is actually, you can see the executions there. So one execution is at this point, one execution is at this point. Okay, so two executions are there. And now this is the trade explanation. Okay, and let me tell you why did I choose Asian session. So first of all, I was noticing for a longer time, for like 8 9 10 days, I was noticing Asian session is giving a really good movement. Okay, and London is always trying to just create liquidity, generate liquidity, and it is not trying to give us any moment. Okay, so and on the London session it was quite little bit lesser choppier. Okay, so I was trading New York session and London, so I left London. Then eventually I went on to see that okay, Asian session is there. So yesterday I took one trade in the Asian session. Okay, so I'll show you. Wait, where's Notion? So I took a trade in the Asian session for the very first time. Okay, on 18th February. Okay, I didn't. I was taking very small loss, so I made 0.27%. Okay, so risk reward was 4, and it was good. Okay, now today I also, okay, now I noticed that okay, the momentum is good. Now I can take my normal size on the Asian open session. Okay, so I risk around $30 and I made around nearly around 215 or something. Okay, so around 1:7 was the risk reward ratio. Okay, let me just explain you these trades. Okay, so here's the trade. First of all, let's just go back. Okay, go on a 15-minute time frame. Now if you see on a 15-minute time frame, yeah, here we are. So the market was rallying, and you can see we were here. This is this particular violet line. You can see this is the Asian zone. Okay, this yellow line is London zone, and this green line is the New York zone. Okay, so let's go on a 5-minute time frame. This is the Asian session. So I saw that okay, there is a low, there is a low, and there is a low. Right now, my daily bias was what? It was bullish. Okay, so buy side liquidity should be generated. Now when the market was falling, according to Indian time, the Asian session is around 5:30 a.m. Okay, but you know well in the EST time it's from around 7 p.m. to 10 p.m. Okay, that is the Asian session. Okay, so yes, while the market was falling, it was creating buy side liquidity. Then again it fell, it created buy side liquidity more. Okay, now what I noticed that okay, the market is falling, so the market needs to take out this low in order for it to go higher. Okay, this was an order block, and there was some kind of if I go on a 15-minute time frame, you can see that that is actually a fair value gap. Okay, so you guys can see this is a fair value gap, and I wanted the market to reverse from this fair value gap. Okay, so I was waiting for the market to reverse from the fair value gap, and it actually did. Right, so if you go on a time frame, right, you can see that. So I was not quick enough to notice. Okay, so there is a SMT. Okay, at this point SMT was there, and which pair am I using for finding the SMT? And this is one of the good thing I found, that you can use XAUUSD. It's silver. Okay, so I use silver XAUUSD to find SMT. So I found the SMT. Actually, I could have entered there, but I waited. You can see that how well it is respecting this order block. Can you see? Okay, so the market came near to this order block. I was expecting the market to actually touch that order block, but you know my limit order of 30 microlots didn't got triggered. Okay, so I had to wait. And now when I went on to shorter time frame, so if I go on a shorter time frame, let me see, let me tell you, while because the market rallied off very quicker. Okay, so I took a short entry there already. This is 1 minute time frame zone. Now if I'm taking you to the 15-second time frame. Okay, now we are seeing the 15-second time frame. Where is it? Okay, now let me just go back. Okay, so after the Asian session, like in the middle of the Asian session, the market started to fall. Okay, and I took my trade somewhere over here. So you guys can see this market came down, then again came down. it went back up. So there's a fair value gap created, and a fair value gap is inverse. But you will ask me, why didn't I take the trade there? It is because of the reason there is no SMT between these 2 points. But again, market went up and then came down, and then again it went up. Now at this point of time, between these two point of references, these two lows, there was a SMT with the XAUUSD. First thing. Second thing, there is a shift in the market structure according to the 15-second time frame, and the market came back to that order block. Can you see how well it is respecting that high of the order block? Now I could have entered there, but I have less conviction over 15-second market structure shift or change in structure or delivery, right? Now the market rallied off, so I wanted, if I might miss this opportunity, so I took a 0.05 entry. Okay, you cannot see entries on the 15-second time frame. I have applied some kind of EA which tells me about the 15-second time frame. Okay, so if we go on 1 minute time frame, you can see my entries. Can you see 0.05 entry is there? So 0.05 entry I took here, but I was waiting for the market to come back to actually show me my one of the best entries. Okay, so the market came back down. I wanted the market to actually come back at this point. Okay, can you see the high of this particular thing is touched, but I don't know, somehow my limit order, it didn't got triggered. Okay, so there was a limit order 0.03 at this point, so it didn't got triggered. So the market exactly rallied away. But now I know that because the market has rallied away, can you see, and the momentum away from the market is really good. This is all on 15-second time frame. The momentum was really good, so I was like, okay, now because the momentum is really good, I will wait for the market to come back. So I took my entry somewhere over here. I set my stop loss below this low because the rejection from the order block was really good. So I feel that okay, this particular thing is not going to come below this point. And now where I set my target. Now let's get back to this thing. So the market rallied off. Here I showed you one entry. Can you see? This is where I showed the entry. You could have taken an entry there and target maybe around 12 or 1:12, 1:13, but okay, we didn't get it. It's fine. So the market rallied off. I took a 0.05 entry there, and then I took 30 microlots here. Okay. Now I'm going to talk about that 0.5 and not sorry. I'm going to talk about the 30 microlot trade, not 0.05 microlot. Okay. So I took a trade, and also before I took a trade and before I want this thing to happen, actually from this point to this point there was one more SMT. Okay. Now I felt that okay, whatever it is falling, it's not a good trade, so it will again start to rally. So there was an SMT and the price rallied. Now can you notice where did it rally? Before the market started, okay, in the Asian session, it has created one high here and one high here. So I am very sure that these lows are going to be taken because this low got taken out. This particular low, this can you see this low got taken out by this low? Okay, now because this low got taken out, what it means? It means that now the market is about to rally. Okay, SMT was there, and if you see the X at this point of time when the gold was somewhat gyrating or trying to go higher and higher, XAUUSD was falling like crazy. Okay, at this point you can see at this point it is falling like crazy while XAUUSD is somewhat doing higher. It means there is great interest of institutional sponsorship in this particular pair or whatever you call it, commodity. Okay, now I entered my trade here. So first one target, second target, buy sell liquidity reached. Now whatever this line you see, this is not a recent high. Can you see? If you go on 15-minute time frame, you can see this is a high from around 10 Feb. This high and this again high. I was expecting the market. I was not expecting the market to take out this high because it's a long-term liquidity. Before the market reaches that high, it should first go down and then go high. Got it? Okay. So only then it should take out this liquidity. Now let's go back. Okay. Now we have this thing. Okay. So buy sell liquidity is there. This is a longer term buy sell liquidity. That is why I have made it with 2px. Okay. Now small liquidity, and then bigger high time frame liquidity. Okay, now when I go on a 1 minute time frame, so how did I exit my trades? So first of all, if I see on 1 minute time frame, I took 0.05 entry out here. Sorry, I took my entry over here, and then it rallied off. First entry I took out here, sorry, first thing I took out here around 0.20 because I saw two candles and I was like, let's take out entry because 0.30 micro, sorry, 30 microlots is not a really good size for me. Okay, this was like a heavy quantity for me. 30 microlots is no good quantity. So yeah, two red candles were this. So I was like, let it be. Okay, why did I take out this thing? Because if you see, there's a up close candle, then there is a down close candle. Okay, then the market started to rally somewhere, and then I took it out. I'm like, okay, let's not wait for it because there's a fair value gap created, and then again a fair value gap is inverted. So there are high chances that the market can reverse. So I took out 20 microlots, and then I let the 10 microlots rally. Okay, so when I let them rally, The first one I took out here, and the second I saw, okay, it's not trying to go over it. Okay, so I was like, I took another 5 microlots off, and then I noticed, okay, the market is really not, I don't think the market is really trying to take out these highs. So first 5 microlot I took it here, another 5 microlot I took it here. Why? Because news was about to approach. I didn't want my trade to be open during the news. So 0.05 microlot, I let it trade. I wanted to just trade to the higher point wherever it is going. But this market fell, and then I was like, okay, let's take it out. I should not wait, okay, because there's fair value gap created by, and also the shift in the market structure. Okay, now this was that trade which I took. Okay, I took my entries out with small quantity, and then small quantities. But one thing I forgot to notice is that, can you see? Let me delete these jargons. Okay, delete SMT, SMT, SMT. If you see clearly, this low has just been touched by this low and has not been taken out. So there are high chances this sell side liquidity is built. Now the sell side liquidity is built, and people are expecting for the market to go higher. Okay, this liquidity is not taken out properly. This is the order block. It should reject from this order block. I didn't notice this. Otherwise, I would have taken this sell side trade as well. So the market went back into that sell side trade, and then it rallied off. So yes, there is one opportunity that is missed, but it's okay. I could have, if I would have taken this trade out, then where is my point? Yeah. So I could have taken my entry at this point. I would have put my stop loss at this point. Okay. Now my what do you call it? My take profit will be here, but I'll let something right because there's an order block here. So obviously it will touch the order block. So somewhere at this point, I'll take my the last entry. So it could have been another 1:8 trade. Okay. Now if I see at this point of time, now you can see, yeah, this is the highest point. Market fell, came back again. Okay, this is the last order block. Can you see this up close candle and the market moved rally? This is the point where the market is exactly coming to take this order block. Can you see that? And this is the type of trade which can get you 1:15, 1:16, 1:12. Okay, and then the market rallied off, started, then fair value gap, fall, then it started falling and took out exactly the lows of all these things. Okay, and then it started rejected from the order block, and obviously it is rallying. We don't need to talk about that. Okay, if I take another trade, I'll let you know. And these are my executions. You can see these are the executions. So 1 minute time frame, execution 1 2, and then I took it all out. Okay, then again last 5 microlot I took it out because yes, it has created a fair value gap, no need to get it back. Okay, I took it out. Okay, one thing I noticed is 15-second time frame is really useful. Okay, use it not for finding the shift in the market structure, but use it for taking entries. It's like really precise entries if you notice. Okay, and that is it for the day, guys. I am up 6,102 something. Okay, I just need $200 to pass phase 2. Okay, let's see how many days it takes for me to pass the phase 2. Okay, till then, see ya, bye bye, have a nice day, keep studying and keep learning. Have a good luck in your trading. Bye bye.